Take a look at this chart. It could be any chart. It could be Forex, futures, it could be a stock chart. We don't know what kind of chart it is. Quite frankly, we don't really care. The counterpunch trader is going to work on just about every chart that's worth trading. What I want you to try to think of is what's going to happen next. Here we are on the right edge of the chart. Do we know what's going to happen next? Do we have enough information on this chart to make a trade decision? Take a guess and see if this chart's going to go up or down. Nice move up, right? And then a nice move down again. This is typical price action. You don't know what it's going to do. It could do anything. You can guess right, you can guess wrong. What the counterpunch trader wants to do is guess which way the price is going to move with a great level of certainty. And that begins by identifying key market exhaustion points. We do that with a very interesting indicator. This indicator is built into the counterpunch calculator. I'm going to show you what it is right now and exactly how it works. In past videos and examples, you may have only seen 2 dots. It doesn't matter if you see 2 dots, 3 dots, 1 dot. The important thing is that these dots show us where market exhaustion exists. Let's take a look at this bar right here. You'll notice that there's a market exhaustion here. Of course, we could see that after the fact when we look at this chart, because we could see that it stopped moving lower and then it began to move up. We would call this either a swing level or pivot level. Okay? And we already know this. We could see this without the dots. But imagine if you're here on the right edge of the chart. Now these dots are not going to show up yet. Before the dots identify an exhaustion point, it's going to ask for some confirmation. Okay, remember, confirmation is one of the principles of the counterpunch trader. And so you're going to end up with a third bar, 1, 2, and 3. And once this bar is finished forming, the counterpunch trader is going to say, yeah, that's an exhaustion point. Let me put those dots here and show you where that is. Okay, that's what those dots are doing. It doesn't happen on the moment that a bar moves the other way. Notice it doesn't happen here, for example. It looks like it's an exhaustion point, right? It comes down even. If we're at the right edge of the chart, you might think, well, isn't that an exhaustion point? Well, as you can clearly see, it wasn't. This became the exhaustion point right here. And yet the dots don't even begin to show until 1, 2, 3 bars later. Okay? So the dots are always looking for confirmation. And the way they do that is they first are looking for how many bars are closing in the opposite direction. Notice this bar is a green bar that closes up here. The 3 bars that follow, they all close below this green bar. Okay? Same with this one. You have a bar closing down, and then you have 3 bars closing above. One, this one closes above. Even though it closes lower than this one, it's still above this bar here, you see? So 3 bars close above. That indicates the exhaustion point. It's doing more than that, though. It's also counting how many bars closed down, like in this case, a lot of bars closing down, right? Prior to the reversal bars closing up in the opposite direction. Okay? And we have these settings within our counterpunch calculator. And they're set at the default level. We don't need to really change them ever, although perhaps in the future we'll explore some other settings just to see if there might be some additional and unique trade opportunities. But for right now, the settings are perfect and they work as is. We'll take a closer look at that when we get to the actual calculator inputs. Okay? So remember, these dots are an important indicator, but they're built into the calculator. So now when I ask you to predict what the market is going to do next, you kind of have a better idea of what to expect. Of course, we already saw what's going to happen next, but this is the same chart, only now we're seeing the exhaustion points. Of course, we need a lot more than that from which to base trades upon. The next step is determining the higher time frame trend. We're going to do that by putting our high trend chop indicator on the chart. When I teach you the setups of each trade, you're going to learn better how this works. But you'll notice as you look over here, this is a trade that goes up, and you can see that there's a turning point in the trend. So we're looking at these signal lines here, the cyan line and the yellow line. One crosses over. Notice that the trend is down, 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 but once we identify the exhaustion, green bars start going up, you get a crossover, and we're trading with the higher time frame trend. Okay? That's the general idea. I'm going to discuss in greater detail how this indicator works when we talk about trade setups. The next important piece of information that we need is to identify the direction of momentum so that we take trades in the right direction. This is all part of the confirmation process. We're going to borrow a very powerful indicator from the trend jumper trading strategy called the jump line. You could also call it the signal line. It's a different signal line than the signal lines down here on the chop indicator. So I will often refer to this as the jump line or the momentum indicator. It's very simple. When the price is above our jump line, we're going to be trading up. When the price is below, we're going to be trading down. We're also going to use this powerful indicator as a tool to manage trailing positions. There are some optional indicators that we're going to employ as well. This is a 50 exponential moving average. I've darkened the color a little bit because I do not want this to be too influential. We're going to use this for very specific purposes. I'm going to team it up with a 200 exponential moving average. I've darkened this one as well. And once again, when we get into the actual trade setups and how we use the strategy, I will be going into greater detail on what we're going to do with these two EMAs. We're also going to use a simple moving average. This is a 20 simple moving average. Okay, we got two exponentials and one simple. Notice that I did not darken this color. I made it a dark blue so it will stand out. It's even thicker than the other two. We're going to use this with some trade plans, and this is going to help us mitigate some of the choppiness that can occur in markets. Finally, we're going to use the complete counterpunch trader calculator. The counterpunch trader calculator is what's going to put the actual trades on the chart for us. Not only that, but it's going to give us our entire trade here in the data window. Entry, targets, stop. It's also going to give us some other important information. It's going to tell us how much we can win at each one of the three targets, what our risk is, and what the risk-reward ratio is to each of the three targets. This is a very important piece of information. We'll get into the calculator in a little while. Alright, let's talk more about our high trend chop indicator. There's another part to the indicator, which is the chop part. You'll notice these dots here along the zero line. This indicates a compressed market, a market that we could expect there to be some choppiness. We're not going to be too concerned with this for the most part. Sometimes we'll just flat out ignore it, but other times we are going to want to pay attention to it. When we get into the trades and how we manage trades, we'll talk about that in greater detail. I want to show you how this indicator is determining choppy market conditions so that you understand what's happening. It's actually borrowing from an old principle, but we're applying it in a fresh new way. The best way to illustrate what's going on is to show you with two additional indicators. This is a Keltner channel, and these blue lines are Bollinger Bands. I'm sure a lot of you have heard of the Bollinger Band squeeze. That's exactly what's going on here. When the Bollinger Band, which is a dynamic indicator that expands and contracts based on volatility, moves inside of the Keltner channel, that indicates a time of compression. When the pressure is building, the market is compressed. And trading inside of that can be very risky. When the Bollinger Band exits the Keltner channel, you'll see the green dot here indicating where that's beginning to happen. the price tends to open up and can move in a big way. So we want to obviously be trading in the direction of the breakout. Sometimes there are false breakouts, and then the trade in the opposite direction can be very powerful. If we were to put our other lines on this chart, our jump line, our other EMAs, all the calculator dots, it would be a very messy and confusing chart. In fact, it would look like this, you see? Kind of crazy. Hard to interpret what's going on when you got the Bollinger Bands and the Keltner channel on top of everything else we're trying to look at. That's the beauty of our high trend chop indicator. Not only is it indicating the higher trend, it's also showing us where the market is compressed and when the market is likely to break out of that compression. So we don't need to have the Keltner and the Bollinger Band on our chart. Looks a lot different now, doesn't it? You'll remember that I said, if you got the free chop indicator, that when you're in chop like this, there are times you're not going to want to take a trade. For example, we have setups, as you can see right here, and right here, and right here, where you're actually trading up into the 50 EMA, which is pushing down. This is one of the main reasons why we use our 50 EMA. We don't want to take these trades when we're in the chop zone. We want to avoid them. Now, the third one actually does break through and it comes up and it hits this first target here. And sometimes it will go up and actually be a successful trade. But the odds are always in our favor when we take trades that are actually in the direction of the 50 EMA. You'll notice on this short trade right here that we're in between chop. The Bollinger Band came out of the Keltner channel for just one bar. Okay, so you can imagine that from here to here is basically all chop. On the very next bar it comes back into the chop zone. But notice a trade that works for a big move down is the one that went in the direction of the EMA. The EMA is coming down. The setup is below the EMA. That's the key. Because the setup is below the EMA, we go short. These setups are below the EMA, so we don't go long. Okay? Can you make an adjustment and push this entry a little bit above the EMA? I'm sure there are going to be some cases when you can do that. You're going to want to have additional information. Otherwise, you're better off just waiting for the next setup. Remember, you're in a choppy price pattern here. We don't want to get too mixed up with it, but we also don't want to be afraid of it because when it breaks out, it can lead to a big move. That's exactly what happens here. So let's talk about the actual high trend part of the high trend chop indicator. To best illustrate how this works, we're going to take this 5-minute chart and multiply it by 5. I went ahead and put another high chop indicator with some different settings below our default settings because now this indicator is showing us what's happening on a time frame 5 times higher than this 25-minute chart, you see, and it's showing us the chop zone that's occurring on this 25-minute chart. So in order to see how this works by identifying the faster trend, we need to divide these inputs by 5. So instead of 25, 270, 25, we're going to use 5, 34, 5. And I'm only using this to show you how it works. Ignore the chop indicator because that doesn't change. That's the same. Remember, that's based on the Keltner and the Bollinger Bands. All right, so let's ignore that for a moment. Of course, we're looking at gold here. Basically, the signal line is crossing over and showing us when the faster trend is going to be down, when it's going to be up, a little bit of noise, when it's going to be up again. Okay, so this is showing us what's happening on a faster trend. Take a look at the price. When it crosses over, the trend is up. Now that's on a 25-minute chart. So imagine this on a 5-minute chart, 5 times faster, what that's going to look like. Okay? So in essence, that's what's taking place. We've got the slower moving indicator on the chart we're trading. You could see it set 5 times faster, showing us the faster trend on the time frame that's 5 times higher by putting on this faster version of the indicator, you see. So it doesn't look like much on a 25-minute chart going from here to here, right, where this crosses over and goes down. But remember, when you put that on a 5-minute chart, you're going to have 5 times as many bars. So in essence, that's the general idea of how the indicator is supposed to work. Incidentally, could you trade a 25-minute chart of gold futures? I don't see why not, so long as you back test it first. Okay, so now that you have a better understanding of our basic indicators, I'm going to show you how the trade setups are working. What are we actually looking for each setup? And before we do that, I have to show you how we're using our exhaustion dots. Okay? So basically there's 3 kinds of trades. There's the counterpunch trade, there are your failed swing level trades, we're just going to call them failed swings, and then there are your second chance failed swing trades. Okay? 3 kinds of trade setups. The counterpunch occurs when you have a group of 3 dots. In this case, it's below the market, right? So this would be, we'd be looking for a long trade. These 3 dots are lower than the 2 groups of dots to their left. Okay, so it's lower than this set of dots, and it's lower than this set of dots. You see? That's where we start getting a counterpunch. Alright, so if we look at this next group of dots, this is not lower than these. So you're not going to get a counterpunch trade. You're not going to get one here either. What about here? This set of dots is lower than this set, but not the one that's 2 back. You see? This is a little bit higher. And you could look at the data window to verify that. So there's not going to be a counterpunch set up here either. Let's look a little further back here. The next time going backwards that we actually see dots that's higher than the 2 dots to the left is this group right here. It's a little bit higher than this, and it's a little bit higher than these. A lot higher than these. So it's higher, right? It's the highest group. So you can get a counterpunch trade short with that group of dots. See how that works? So you want to get used to looking at which ones set up counterpunch trades and which ones would not. Okay, obviously we're looking at a Euro US 233 tick chart. It could be any chart. Alright, in fact, let's go ahead and just make it a daily chart, for example. Alright, so right here you've got these 3 lower dots. A long trade would be a counterpunch trade. You see? This dot is not higher than these. In other words, when you're going short, you're looking for the highest set of dots, and when you're going long, you're looking for the lowest set of dots. So we have to go all the way back. We can go to here, and we can see these dots are lower than the 2 to the left, so you can get a counterpunch trade. This dot, this group of dots, is not higher than the ones to the left, so no counterpunch trade. Has to be higher than the 2 dots to the left. So there aren't any counterpunch short trades all the way down with this trend. And the reason why is because the counterpunch is your classic reversal trade. Every now and then you'll see it as a breakout trade if there happens to be some consolidation or choppy price action. Okay, so obviously the counterpunch trader has to be more than just a reversal trade system. You have to go all the way back to here where you finally get some dots that are higher than the groups to the left, the 2 groups to the left, before you can get a short reversal trade, a counterpunch trade. Alright, so that's what we're looking for with our first setup, the counterpunch. Okay, the other thing that has to happen with a counterpunch trade is that the high trend chop indicator has to be in the blue, and the other thing that has to happen with a counterpunch trade is that the high trend chop indicator has to be in the blue, and then it's got to cross over, the cyan line has to cross over the yellow line and close that is one of our confirming indicators for counterpunch trade. So here we have a group of dots that's above the two groups to the left, and our signal line is crossing over, and our high trend indicator is blue. Remember, it's a reversal trade, so we want to reverse after a trend has already gone up and you've gone into the blue. Okay? So that would be a possible counterpunch short trade. All right? So for a long trade, obviously, you have to be in the red, and then it crosses up. You've got dots that are lower than the two groups to the left, and you could get a long trade. What else do you need? A couple things. One, you need a green bar or a doji that closes above the jump line. Okay? So right there on that green dot. And it has to be either on the green dot or a number of bars to the right. Usually we're going to set the default to 4. So it could be up to 4 bars to the right. And you can make an argument to even set it to 5 bars to the right. I don't think it makes that big of a difference, but every now and then it's that 5th bar that would give you a setup. So in this case, the bar is actually green and above the jump line on the 3rd dot. Okay? There's going to be other times when that bar might be below the jump line, it might be red. We'll look at some other examples. In fact, let's flip over to a 5-minute chart. Okay, here's a 5-minute chart. And you'll notice that the high trend indicator is red. You have the line crossing over. You've got the 3 dots lower than the 2 groups to the left. But notice that the first bar is green, but it's below the jump line. So that's not a setup bar. The next bar is green above the jump line. That's going to be your setup bar right there. Remember, we're only talking about the first kind of trade, the counterpunch trade. And as the name implies, it's that big reversing counterpunch. The market is moving down, 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 exhausts itself. We get confirmation that the trend is turning. Momentum has turned and has gone above our jump line, our momentum indicator, and we have a price bar that's either green or a doji. Okay? The final piece of information that we need in most cases is that we're going to have to exceed the high of this bar by a certain distance in order to get an entry bar. Usually it's 2 pips or 2 ticks on a futures chart. On a daily chart, maybe you do 10 pips. 10 pips is what I've been using. And I just turned the calculator on and you can see that there's a setup. Now, why are there 2 plus signs here? First of all, you need to know that this plus sign is the actual entry price. Okay? When you click on the bar, you could see the entry. You could also see the targets and the stop. Alright, the stop is down here. Usually it's going to be 2 pips below the bar with the lowest low of these 3 dots. Down here. Okay, and you can see that's where it is. But why are there 2 plus signs? The reason why is this. On this setup bar here, that's not really a setup bar. It's a warning, but what happened is we didn't get the confirmation yet on our high trend chop indicator. The signal lines had not yet crossed over. So the counterpunch requires that the signal line crosses over. Once that happens, then you get the setup bar. Notice that the targets print above the actual valid setup bar. Even though that's red, the setup bar is the green bar, but the trade doesn't become valid until we get our confirmation. So even though this is set up above this red bar, that's just showing you now that the entry is valid and you can get in on that trade. At this point, you can see a setup bar and a possible entry, but you're still waiting for confirmation. You see? Now, if you look over here at this one, why is it way over here above these dots? And these dots don't qualify as a counterpunch. That's true, they don't. This set of dots is below the 2 groups to the left, you see? But remember I said you can be X amount of bars to the right for a setup bar. And here we have 1, 2, 3, 4 bars to the right, right there. And it's a green bar, And you can see that we have confirmation with the signal lines down here on our chop indicator. Okay, so this setup bar here is coming from these three dots, this counterpunch group of dots. That's how that works. And we'll look at a lot more examples. All right, now I want to talk about the next setup, the failed swing setup.